Hi, everyone. Welcome back to the PlayBridge podcast. This is your host, Ruffin. I am so excited to welcome Nichole Wischoff to the show today. This is really special, you guys, because she normally does not do podcasts, and she made a special exception for us. If you don't already know her, Nichole is the solo founder and GP of Wischoff Ventures, where she's investing into pre-seed and seed stage unsexy businesses out of a $20 million fund too. Before venture, Nichole started her career working at two successful fintech companies, one of which was acquired by Walmart. In this episode, we chat about everything from tips for having a successful startup career, how she got started angel investing, and how she's built such a breakthrough career in venture capital. P.S. Make sure to listen through to the end, especially if you're a founder. I promise it will be so worth it. Okay, let's get started. Hi, Nichole. Welcome to the show. So excited to have you here. Super cool since this is an exception for you to do a podcast. So very honored that you're here to share your story. First of all, how are you doing? Where are you calling in from today?
Yes, thank you for having me. I'm doing great. I am in Nashville at home, where I guess Wischoff Ventures is based, right upstairs in my home office.
Amazing. So getting right into things, before you started Venture, you were an early employee at Blend Labs, which went public in 2021. And then you were also part of the founding team at One Finance, a neobank acquired by Walmart. So I'm curious, what were your biggest learning lessons from working at high growth startups, and how has that impacted you as an investor?
Yeah, great questions. Yes. So jumping right in at Blend, I think I wouldn't say it was close to product market fit, but a product in the market, an identity of who they were. It was still less than 100 people and pre-series D. And I absolutely took for granted like the beauty of having raised venture capital and sort of having that cushion, and then also having some idea of your product and your identity. And going to One Finance, we had absolutely nothing. So definitely ripping the Band-Aid off. I didn't know anything about truly like building from 0 to 1 at Blend, compared to going to a company that hadn't raised any venture capital, only had an idea of who our customer segment would be, what the product would be. And so really, really got to like see what is an empty whiteboard and how do you fill it and iterate and fail fast and get moving. And Blend was, even though there were still not 100 people yet, much further along. So I thought I knew what an early stage startup was when I got at Blend, and I had no idea until my experience at One.
Do you have a preference of working at like the early stage or the Series D startup?
Early. I think a friend of mine says this best, but advice I got, I think earlier in my career was there are people that are really great at starting companies. There are people that are great at running them, and there are people that are great at growing them, growing and then running. I am absolutely now, having done a little bit of all three, and my third startup being Built Technologies, which was like a little further along as well. I am definitely a start to grow. I am not a running companies. And that was a really, honestly, great lesson for me to help me focus on like every next decision I've made since.
What do you think makes someone or yourself good at being like a great building company person?
You have to have a really great appetite for ambiguity and risk. And I think if most people would know what their appetite is, if you ask them, I think like most people are pretty self-aware. And they'll just mostly cringe when you say, we don't know what we're doing yet. Do you want to help us figure it out? And that's a good litmus test. I think a lot of it is knowing that about yourself. Do you like taking risks? Are you okay with just taking the ball and running with it? Or do you like to know that there's structure and that there's a paycheck and that none of those things are going away anytime soon?
I worked at a Series A through Series C fintech, so I kind of got to see like, love the ambiguity at the beginning, but then as it started to get more like organized and more about running a company, definitely found that I liked that a lot less. So I definitely share that interest with you.
Yes, I am allergic to meetings that have more than three people, and I think
Yes,
board meetings are absolutely miserable. So I am not suited for all of that.
definitely. So I read that you had a big financial outcome when One Finance was acquired by Walmart, which allowed you to start angel investing. So, for our listeners who might be pursuing career opportunities and wanting to work at startups, what advice do you have for people trying to like choose the right startup to work for in the next winter?
Yeah, so interesting. So actually, and I think this might have been wrong in some of the PR, but so I wrote a few angel investments actually before the one transaction. So I started angel investing and did about four investments in 2020 pre-acquisition of One Finance. And so what the acquisition actually did for me was enable me to even entertain building a firm. It is not cheap, and we can kind of get into breaking that down, but it is a very like expensive and lucrative endeavor, if you will, starting a venture firm. Going back to, giving advice on finding a startup, and it really depends on your goals, like, is it that you want to start your own? I give you totally different advice. Is it that you just really like being a part of a team and being at sort of a corporate feeling business and contributing? And I'd give you totally different advice. I'd say kind of based on what interests you in the future, especially if you're just getting started. If you really want to start your own company, you've started companies in high school and maybe college and like really like to bootstrap stuff, I would tell you to absolutely find a seed stage company. Ideally, a company that has, I don't know, a few million in funding where you're coming in and it's somewhat legitimate. Typically, the founders are the ones that are there at pre-seed and trying to figure things out and raise some idea. So finding something that's a little bit more insulated, that has some capital, that is like has a kind of mission statement you're at least trying to march towards, and then stick around for a couple of years and see what like super high intensity and a sense of urgency looks like. I know we'll probably get into this, but it's also the lens I use when I evaluate founders. Have they ever seen a sense of urgency inside of a business? Because if they haven't, it will come as a culture shock to them. Like, oh my gosh, you mean I can really try everything? You mean most things won't work? It really helps if you get on, like, hit the ground running at a seed or maybe Series 8 startup where you see what that actually looks like in practice.
Definitely. So you started angel investing before your One Finance exit.
Yes.
What was your first investment, and like how and why did you even start investing?
Yeah. So and I think a lot of people think this. You think angel investing is that thing that like cool people get to do, that like have this huge network and have like know some secrets that you don't know. And it's really just, I think, a lack of knowledge as to how it all works. So my first angel investment was in a company called Vesta. Vesta is a building mortgage, like loan origination software. It's a system of record for mortgage lenders, which can be banks or non-banks. I worked with the co-founders, Devin and Mike, at Blend, which is my first startup. So I had a lot of experience working with them, and I also knew the problem intimately. And so my first angel investment was in their seed round, which was led by Conversion Capital. And then they've since raised a Series A from Andreessen. Andreessen's on the board, and they are doing amazing. So I feel very lucky. I then invested into their Series A from Fund One. And so I'm trying to go on their journey with them. So I feel very lucky that the first deal I did is not only with great friends, but also has been very successful so far.
How did you first get comfortable with like making an investment like this? And, you know, was there any education that you felt like you needed to get? And would you point women to anything?
Yeah. So I think I would just ask, like, one, the founders are learning as well, which is something I learned. In this case, Mike and Devin have been around the block, and so they were a little more educated. But in some cases, I meet founders, and it's like, what is this safe? Like, what is convertible? What is a convertible note? Like, how, one, you can really Google this stuff. Typically, if you're getting in early, and I'd recommend, like, I would tell anyone trying to dabble in angel investing. I mean, you could write a small check in an early stage company. You could write it in a later stage company. I will say, I think that every team has room for a 5K check if you add some form of value. And so I actually would argue, I would say anything under 50K, you can typically as an angel come into a deal and get in. I think when people start to try and creep over 100,000 as an angel, it gets very competitive. And I think that's harder to do. But one, just ask. If you know of a company that you are really excited about that is raising, you meet a founder. I honestly, I really think anyone can sneak in with $5,000. Start with $5,000. It's typically on a safe note. It's super easy, get that signed, and then get moving, and then try to interact with the founders. Let them know, listen, if you know of other founders that are raising in this area that I seem to really like, feel free to make an introduction. What I realize is that it's really low barrier to entry if you have some capital. And founders are really excited to work with angels. Like there's not, I feel like enough of us to go around, especially women. And so I think it's really just getting in front of them and then asking for the allocation.
What are some ways that we can add value to these early stage startups and get on their cap tables?
Yes. So figure out where their gaps are. I think something when I meet founders, they're all very different, right? Some founders are incredible engineers and they have never thought about go to market, or they don't, their favorite thing isn't selling. And so when you can figure out, you'll know there's a different profile, for everyone you meet. Sometimes founders are like incredible go to market leaders, incredible sales leaders, and they have no idea how to build a product, right? So I try to make sure the team has like complementary skill sets, but that's a great opportunity for me to say, okay, what's working from the pitch that I just heard? What isn't? And immediately saying, you need customers, or like business model. I don't harp on. We can get into that early, but like it will be very clear to me, like where my kind of sliding in the door comes in. And I try to pattern. So I would say, kind of listen to the founder, try and figure out, like, if you're really good personally also with people and you're like, I know a lot of potential customers for them, or maybe new hires in your network, try to just fill in gaps that you observe on calls. You'll find them. If you're amazing at product, that's pretty straightforward, or design, but try to, or marketing. But like you'll ask them where gaps are, or you'll notice on the call, like, ooh, they seem a little weaker on this side or didn't have the best answers, but I believe in them. And then kind of insert yourself in and say like, hey, would this be helpful? I think I could do A, B, and C for you.
Definitely. So you're now the solo founder and GP of Wischoff Ventures. Amazing. It sounds like you had been angel investing for a few years before that. What initially motivated you and led you to start your own fund?
The short of it is that I really didn't want to work for anybody else anymore. And that is not because I didn't love those experiences. I am a like can't sit still, like border collie that has to be taken on 10-mile runs, like insane energy and insane, like it can be done. Like like I just wake up and I'm like, what am I going to do today? Let's go. Like all of the time. And so when you work with teams and it's no fault of them, and I'm not obviously anti-teams, you need them to build great businesses. But it's slower and then it gets slower. And to your point earlier, and then you're, oh my gosh, like a pre-IPO company, and there's all of these check boxes and people you have to meet with to get something done. I was just so sick of it, right? So I was at this point where for 7 years, I was just like, you play nice and you build teams and you scale, and then things go slower and slower. And I really, really wanted to continue the momentum of, I've only worked with CEO co-founders for my career. And so how do I in tech? And so how do I continue to complement and be a silver bullet for these CEO founders at scale? So venture capital was like, check that box. Like, how do I, and, crazy ADD. So like, how do I context switch all day long and do new and exciting stuff every day in some cases? And then of course, helping maintain, existing relationships and helping portfolio companies. And then separately, how do I do it all really fast, really scrappy, and build a place that I want to work at that can hopefully prevent this kind of just static, claustrophobic, big company mess. And the only way I was going to be able to do that was to start my own company. This very much feels like a pre-seed stage startup. Every day I have to think about what do I want this to be? Do I want this to be about Nichole? I don't actually. And so it's named after me. So like rethinking that. But again, do I want to do happy hours? Do I want to use TikTok and Twitter? Like those are all my choices. And so having that autonomy, best decision I ever made. I was very naive, by the way. I don't come from venture. So I kind of rolled in like guns blazing. And then I actually got a text from a really well-known VC last night. And she's like, where the hell did you come from? Like you like came out of the woods and like you're crushing it. And I was like, honestly, I just so naively stormed into the world of venture and was like, I'm here. Had I known what I know now, I probably would have thought twice. I mean, I'd still do it, but I think just being naive was definitely an asset coming into all of this.
Did you ever consider launching your own fintech, or why did you choose a fund over that?
Oh gosh, no, I didn't. I don't know why that makes me cringe. I love fintechs. One, finance was extremely hard. And consumer, I really didn't like, I mean, B2B, at least you have multi-year contracts. It's forgiving. You can iterate. If you make a mistake, there's time to kind of redeem yourself. In consumer, it's over. Like if people delete your app or they don't want it there, you have one bad experience. There's really no getting them back. maybe, I don't know. I've gone back and forth on reactivating my Whoop band, which I still find no value in, but I still do it. But like, other than that, I think it's a little bit tougher. So for me, I don't, it didn't speak to me because I knew, when you build a great business, you likely build a great team. I think you could probably get away with having less than 100 people and having a public company. And, with AI and all these advances, I think there will be companies that are like maybe 1 to 5 people and really big. But I didn't see that vision when I started all this. And I just, again, like really wanted to build something that didn't require like me managing 1,000 people.
Yeah, very fair. So walk us through like when you're like, I'm going to raise fund one, what went into all of that?
So I was very fortunate that it was 2021. I will be the first to admit that I was absolutely one of those VCs that took advantage of a really frothy market. I don't think I realized it at the time, but it was much easier to raise capital. So I did some of the angel investing, and I knew a lot of VCs. And a partner at Foundation Capital, they were on the board of one, gave me a call in the summer or late spring of 21 and said, Nichole, you seem to be a great picker of companies to operate at early, which is a great compliment. And your angel investments look great. Would you ever consider raising a fund? And we have a fund of funds. We'd love to give you some capital. And I had no idea what that was. Like, I was like, is this scouting? Like, I don't want to scout. And so made a few phone calls to people that I really admire and respect that are VCs, one being Lee Fixlet Addition. He's dynamite in every way. And other folks, at Thrive and Bain and just people I like deeply respect. And every single person said, you should totally do it. Do it while you're still operating, figure out if you actually like it. And at the time, it was this $1 million idea, and then it became a $5 million fund, and that was based on interest, but largely friends and family, right? I think advice I'd give anyone going out to raise funds is, it was definitely confusing going from fund one to fund two. It created, your friends and family love you and they support you. And so those are the best, easiest, quickest converting calls you're going to have. For me, 5-ish million was probably that ceiling. So I didn't really meet anyone new. Not really. Sandana did come in and write a $1 million check, and I didn't know them, but a lot of folks I knew. And so it created this like, oh, this is pretty easy kind of mentality. I didn't have any portfolio construction. It was, I was still working at Built full time, and most of the Built board came in as investors. And so it was this very like, raised it in no time, closed it, started deploying. And then as I left Built and started thinking about fund two and kind of institutionalizing the firm, becoming a solo GP, it was a completely different experience. And in ways I greatly appreciate, but I really took for granted those warm connections, friends and family. And when you meet new LPs, they don't give a shit about you, at first. Like, they really don't. They don't know who you are. They want to have a relationship with you for years, even to write $1 million check. And so not that I face planted, but I really was like, oh, this is going to take a while. Like, this is not the same one call close, $1 million. And they cared a lot. I mean, portfolio construction matters for a $20 million fund. So there were a lot of learnings, and I'll pause there and can get into fund two, but it was a very, very different process for sure.
Yeah, what do you think when you started raising fund two? And like you said, with LPs, you need long relationships. How did you get over that barrier, and how did you convince new LPs that you're meeting to invest in your fund?
It sort of like reset the Jenga tower. Like, I felt like I had pieces in different places, like as I was stacking things. I think, I was meeting endowments and I was talking to other institutionals, and basically reprioritize my calendar. I knew pretty quickly, okay, family offices, even if I'm meeting them for the first time, don't really have this crazy underwriting process for the most part. You have fewer calls. You might work more closely with them. They have different interests. They like to co-invest a lot more frequently with you. So I really, really started to think about LP construction and how do I restructure my approach. So not spending as much time with endowments. I love them, but they're never going to come into a $20 million fund. The math doesn't math for them. And so how do I rethink my focus? So and everyone I met was a warm connection. I think I had around 150 calls with LPs. Those were first calls with LPs in fund two, and really tried not, like, endowments wanted to meet. I don't know if it was just to hang and like have a couple calls and met a lot of their team, but in the beginning I had no idea. And so I thought, oh, they're really interested. Maybe they'll come in for 5 million. And that doesn't make sense for 20 million. So started to reshift the calendar, the priorities, really try to lean in on family offices and fund to funds, and then asking a lot of questions up front, which now I always advise startup founders to do as well. When's the last time you wrote a check? When's the last time you backed an emerging manager? What is your average check size? What are things that are important to you? And then also asking around to other GPs, like other emerging managers, we all talk. So, hey, did that fund actually convert? Do they just spend a lot of time with you? And not that a lot of people do this, but some of them do kind of use you. They want you to send them deals and co-invest for a while, but they have no plans of ever investing in your fund. So I wouldn't really call them bad actors, but like that does happen and they have no intentions of investing. And so and I'm still figuring that out. But knowing like, how do I tier these folks? Who do I check in with every 6 months? And then who do I check in with monthly that I think will convert for this fund? And yeah, family offices are kind of a sweet spot and they're my favorite, you know. I love my fund of funds. Crossover and Sundana are amazing, but family offices are dynamite.
Can you walk us through a little bit more of like how the LP construction changes high level from fund one to fund two? And then also, can you talk a little bit more about the math that you're mentioning and like explain why it might not make sense for maybe that endowment to come into fund two?
Yeah, for sure. So there's a lot of folks. So if you're an LP and you have a few $1 billion, like, and if you're an endowment, for example, there's some really massive ones with like, you know, north of 5 billion, 10, you name it. To make the math even work and for them to spend the time to underwrite me and deploy capital, they would have to write a minimum of $15 to $20 million check for that to make sense. It literally just doesn't move the needle for them to write $1 to $5 million checks, right? They need to have, if they want to invest in X number of managers, they've got to be deploying much bigger checks to make it worth it for them. Similar to me as a VC, it doesn't make sense for me to go write 25K checks out of a $20 million fund. I'd have a billion portfolio companies and spread myself thin. And it just wouldn't really make a lot of sense, at least for what I'm trying to do. So I actually did a tweet about this and put a few different graphs and charts and stuff in there to show my LP construction, which might be interesting to surface here if that makes sense. But I really, you'll see me doubling down the fund, like basically increasing the fund to funds count and increasing the family offices count and doing a little less of like the one-off operators that wrote 250K checks that don't really scale with you. So like when you scale into bigger checks, it's typically those categories. You'll start to see those numbers shift quite dramatically. And then I always save room for my founders and they write 10 to 50K checks as well.
I've seen the tweet, and I think you shared it on TikTok as well about your LP construction.
Yeah,
so
just trying to be open about that stuff. Yeah.
Yes, very helpful, and I appreciate your transparency. That is a good transition for us. Why are you posting and sharing all this education on Twitter as well as on TikTok?
So I'll give a shout out to a really close friend, and he helped me a lot getting started. There's someone he started a company and sold it and is now an incredible angel investor. His name's Aaron Frank. He does a lot of fintech. And Aaron, I got to know Aaron and Alex Cohen, who's like a shitposter on Twitter. And I think I was in either a group text with them and they were like, Nichole, I met them at the end of raising fund one. And Aaron is an LP. And he was like, Nichole, I was not on Twitter at all. And he said, this is the end of 21. And he's like, Nichole, you're a VC. You should be on Twitter. Every VC is on Twitter. And I had maybe the gift of having no idea how Twitter really worked, as in like, how do people actually talk about venture? Who are the big Twitter accounts? And to be totally honest, Twitter's still sort of a joke to me. Like, I really love it and it's helped immensely, but I don't understand the people that are like, oh my gosh, you're so-and-so from Twitter. Like, who gives a shit? Like, these are just people and they like write words online. Like, to me, I don't really think the hype is like something I get pumped about. I just love meeting people. So again, back to being really naive, I just start like building this thing in public. Like, I'm like, okay, well, I'll start tweeting. And I'm like, hey, here's what I did. Here's what I learned today. Here's what I did. Can you believe this? Here's what I heard from so-and-so. And it was things that I thought were interesting. And I'm like, well, maybe, and like very authentically me, like, hey, can you believe this? Or, and I probably unfairly was dunking on a lot of multi-stage VCs who are my friends, by the way. But I was like, oh my gosh, their job is like so easy. They don't work that hard. And then now I'm like, oh gosh, now that I'm in this, I realize how things work. I take some of it back. But so I just started building it in public. And Chad Byers at SUSE, who has been an incredible mentor for me, and a really great partner and an LP, him and his brother, Blake Byers, Chad started kind of doing this too. He's like, hey, I'm going to try something new. I'm going to start tweeting about the deals kind of in real time that, we're investing in. And I was like, I dig this. I was thinking about me even forming a fund. What would I want to read online? And no one does that. It's like VC is like so white collar, and I call it like a cashmere curtain, but there's like this, like, the whole world is behind this cashmere curtain and like no one really gets to see behind it. And I was like, why is it this way? And I realize for hedge funds, crossover funds, there's compliance stuff and you can't talk about a lot of things. But for me, I wanted to tweet about the stuff that I want to hear. And so I started doing that. And then TikTok is sort of funny. I was like, you know what? I'm going to try this damn thing out. And so I started doing it and similarly kind of repurposing some of the content on Twitter. And I think it was working. I don't know what great looks like on TikTok. I think my issue with it is I am not consistent because I don't like doing it and I don't like looking at my face all the time. And so like, I was like, I hate this. Like, it was the first time I was like, Nichole, you should probably get your eyebrows waxed. I'm never literally this close to my face. And so I don't like it. And I think it's kind of gimmicky. However, I love the content like you put out, and there's like some amazing people on there that put out great content. So again, it's like the stuff that I think I wish existed that I want to put out in the world. However, I think I'm still figuring out. Like TikTok, I just need to find someone to do it for me. But Twitter, I really love, and it's really helped me build a brand faster than I thought I would at this, being 2 years in.
Yeah. What opportunities have come out of just building in public and being visible on Twitter and TikTok?
Oh my gosh, a ton. I think TikTok. So this took me, I didn't know if I'd ever get here, to be honest. I think there's also still, by the way, some VC firms I think are amazing that when I say to a founder, hey, have you met so-and-so? They've never heard of them. I'm always like, how are these firms so good and no one's ever heard of them? They must just like totally crank. For me, I didn't think I had that benefit, right? I wasn't a spin out like Lee from Tiger at all. Like, I don't have this like, oh my gosh, it's so known that you're the best investor. You have crazy numbers on the board. You've taken 1 million companies public. Like, I don't have that behind me. And so a lot of what I've tried to do is literally build this in public, build a very social media forward brand. And the beauty of that is I literally it happened earlier today. I was talking to a VC. He wants to share a deal that he's leading with me. He texts the founder about me while we're on the Zoom, and he responds, oh my God, is that like my favorite third tier VC? Is it really Nichole? Does she want to meet? I have not reached out to anyone in 3 or 4 months that has not responded and said, like, I love you on Twitter or TikTok. Like, I really can't wait to meet you. That has bought me like years. Like, I thought that if I did this offline and only wanted to be word of mouth, which by the way, I totally understand the privacy that these VCs want and they don't want to be public figures. I have expedited the brand building and getting in front of founders and winning deals, by the way, by I think probably 3 to 5 years, transparently. I think, separately, I have met some of the most incredible people that send me DMs. Amazing people follow me. I remember Bill Gurley following me and I was like, oh my God. I just thought it was like the coolest thing. We've never met, but, I met Lance Armstrong. He's now a good friend, like off of Twitter, like just like, and then deals, like deal flow, like founders. If I tweet about like, hey, I'm thinking a lot about the space, who's building here, I get at least 40 DMs and really high quality. And so it's almost like if I put something out there, it just returns itself tenfold. So it's been tremendous for me across the board.
Truly so cool. Such an inspiration. Let's talk about deal flow and the deals that you're investing in now. So you invest $750K to $1 million in pre-seed, seed, Series A, unsexy businesses. So can you dive in a little bit more about what you mean by that?
Yeah, for sure. So in Fund 1, I was doing pre-seed up to A, and then now in Fund 2, I'm actually just doing pre-seed and seed. However, I will follow on in A's. And so trying to stay as early as possible. For full transparency, just on portfolio construction. So for the $5 million fund, there wasn't really an ownership target. I think I was averaging around like just under 1%. And then the goal for Fund 2 is to be between 3 and 5, but obviously closer to 4 to 5. And so I am averaging 4% right now. I have 5 investments in that fund, 2 pre-seed and 3 seed. I try to stay below $20 million post valuations. And then I'm in about 90% B2B focused. No capital intensity, so no lending businesses. I'm not a big fan of insurtechs heading into Fund 2. And a high interest rate environment, a lot of these companies a much higher burn. The cost of capital is far more expensive. So while they're very lucrative in a zero interest rate environment, they are no longer in this one. And so shying away from those, largely purely software, great gross margin businesses between like 60 and 80% gross margins, or at least a path to get there. They may not start there. I have a very big soft spot for all things industrials, which I think most would call unsexy. I do have to give a shout out to one of my portfolio companies, Checkmate. They just announced their Series A last week. Google Ventures is leading that. They are a very sexy consumer e-commerce business. They are doing amazing. They are a portfolio company. But aside from them, I try to stick to things like, procurement software between OEMs and suppliers in aerospace and defense. That's one of my companies, Stell. I love procurement, love supply chain and logistics, have a few kind of freight audit fintech deals, one being Loop. So really, like, if you basically take a step back and look at the biggest GDP drivers in the US, those are construction, manufacturing, transportation. And they're offline, right? And they're really, really hard to get them to adopt tech, which is a totally different chapter of this conversation. And so how do we start kind of pushing that future forward, and largely North America focus for now? So spend a lot of time there and have a few construction investments as well.
Can you walk us through your process of starting with like, how do you even find a deal to invest in? And then what goes into like your diligence process, and how is that different from pre-seed, seed, Series A?
So every day I'm like taking notes for myself on what's working, what's not working. So it is a work in progress. I started using Affinity, which was incubated out of ABC, I believe, which is a CRM for VCs. I don't know what I'm doing, so I can't tell you if it's helpful, but I'm trying to stay more organized. So when I was first getting started, a lot of it is just like, and I still do this, but it is a lot of like warm intro. So I try to meet, my biggest like thing is I travel almost every week. I meet a billion people. Sometimes it's from Twitter, sometimes it's through my own network. Everywhere I go, I try to meet at least 10 new people, VCs, operators, founders, and just expanding the network and the reach. And it has been incredible to see that now compounding over, a year and a half. And so what that means is, one, you meet a lot of other VCs. We all invite each other into deals. It's extremely collaborative. So I'd say kind of top of funnel, the calls I take first are typically warm intros, because it's from a founder that says, Nichole, my best friend's starting a company. Other operators, they're like, Nichole, my buddy just left, Brex, and they're starting this great company. You should meet them. I trust those people. It's an easier kind of intro. Again, a lot of other VCs. Some of my family offices own massive industrial businesses, and they're looking at startups and they want me to meet them as well. And then a lot of cold. Honestly, I reach out to people cold on LinkedIn, usually. Twitter, I don't really do a lot of outreach. It's kind of weird, but to me, I don't know why. But I probably get on Twitter per day in my DMs, 50 founder messages minimum. And every time I tweet, it probably 2x's, so maybe 100. So it's really hard for me to manage. I don't know how. Two, LinkedIn, I think I checked this morning, like 5,500 requests to connect and messages. It's not possible to scale it. Something that is keeping me up at night right now is I'll hear a founder is raising, I'll go to LinkedIn and I realize they added me and messaged me a month ago. That pains me in my soul because I'm late, but it's, again, hard to manage. And then Twitter, on my website, I've linked in my website, there's an Airtable. Since January, I have about 3,000 pitch decks in there, and I can't even manage it. So it's like, it literally is everywhere. And I think a lot of that is because people know me on Twitter. But the stuff I like is like Twitter I'll use intentionally to say, hey, like right now I'm really excited about, like, on the AI front, like LLM specifically focused on fraud and fintech. So I haven't tweeted about this yet, but I want to soon. And I want to ask who's building this, and I will stalk my DMs to find out who's building it. And that's more intentional. So it's honestly a combination of like all of these things that keeps me extremely busy. And I probably see right now 15 warm like pitch decks from people I know a day, and that doesn't include any of the cold stuff. So it's a lot.
That's crazy. For someone that might want to reach out to you, pitch you in the DMs, how can they stand out?
Yeah, so I've never done this, and I don't know how many people are going to listen, but I will share my email out, which I haven't done publicly. So if you want to reach out, that's probably the best way. Or intentionally add a note on LinkedIn and say, listen to the, podcast, like just so I have some kind of connection because there's so many. So LinkedIn, send a note, just add a note to me and just like call it out. Or my email is my first name at my last name.com. So Nichole at Wischoff.com. Those are, I'm going to try this out and see if this is easier to manage, but those are probably the best ways. Twitter is unfortunately a black hole, and hard to manage. So that's probably the least effective way to get in touch.
Totally fair. Amazing. Well, that was a very special shout out to everyone listening. So take advantage of that. What advice, as we start to wrap things up, would you have for women looking to either break into venture, start their own fund, or just get started angel investing?
Yes. I would, and I hope this isn't like too kind of out in left field. Something that I really try not to do, even though I'm aware that there are less women in venture and yes, it's certainly harder for us in a lot of ways. And even working in startups or just like working in the world, I really try not to use it as a crutch. Like when I'm actually raising or just making the decision to go for it, I actually think it holds me back personally. And so I'm just like, my mindset is, I am who I am. I like certain things. I'm great at certain things. I want to go build this venture firm or I want to angel invest. I'm going to do whatever it takes to get it done. And so I don't think about gender. I don't think about any of that. I just am like, I'm an equal entering someone's DMs. And I am literally fearless. Like even my girlfriends are like, so I'm sorry, how did you meet Lance? And I'm like, I DM'd him on Twitter and I asked him for coffee and then he said yes. I just literally reach out. I am unafraid of anything. So I am like relentless and I would relay that. What do you have to lose? The worst case is they don't respond. Is that the worst thing that could ever happen? So to me, ruthlessly DM founders, ruthlessly ask for what you want. Do the same thing if you're raising a fund. Be really thoughtful about your plan. Show up, pitch yourself, and have unwavering conviction in what you're doing. And I think other people will follow. And just don't use anything as a crutch. There is no crutch. Like if you get the call, you have the same opportunity to pitch someone that everybody else does. And so show up and send it. And yeah, do the best you can. And that's what's worked for me. I just literally kick the door in and I'm like, I'm here. So let's, do this thing.
Incredible advice. Can you share a female founder, investor, or leader who inspires you and a bit about why?
Gosh, I saw this question that you prepped me with and I was like, shoot. Honestly, I really love your TikTok for this. Like I have a really big soft spot for self-made people in general, but definitely self-made women. There's like Judy Love, I'm sure as you know, and I love unsexy, from that perspective. Like, who are the women that have just brute forced like massive empires, right? That just like don't come from money, don't come from a family that said, hey, here's your edge or here's your first check. I did not have any family in my fund. There is no family. And they can't afford to ever invest or do anything like that. So for me, it is literally anyone that is bootstrapped, their entire careers and then, made billions of dollars. I think that is, I was listening to a podcast and someone explained how rich people do a really bad job of like reaching more than one tier below their status to help people. And so we all kind of like, I think people that I have plenty of friends like this, but if you are fortunate enough to have a family that kind of starts their life above the surface, if you will, you're only climbing or pulling someone out like maybe another tier above the surface. Like I think I grew up in public housing and super poor and on food stamps. And so I was probably like 700 feet below the surface, but no one ever looks under the water. Right. And so I try to remind myself to always look below me and pull myself up. And I think that is something that I think more people should do. But I realize it's hard, right? It's taboo. You don't understand them. They don't understand you, but always trying to say like, how can I go a little below my current network, especially as it gets bigger? And my life has changed, right, immensely. And the people I hang out with and spend time with. So always trying to remind myself that like there are a lot of me's out there that are eager and ambitious, and you make sure that you don't forget about those people.
And then finally, where can people find you? Where can people find Wischoff Ventures?
So Twitter, I'm the most active, talking all the time. LinkedIn, I probably post once a week or every 2 weeks, but I'm still kind of logging and cruising around. I am hosting a summit. It's invite only, but if people really wanted to come, which is a huge event, I'm looking forward to our first annual summit in New York in October, and we'll bring a Nashville flair. So there'll be some surprises there. I do a lot of dinners across like basically every month. I'm doing one with Teal Capital in LA in a couple weeks. So I'm always like, within the different hubs doing dinners and stuff. So if people want to get into that circuit, they should just reach out and let me know.
Awesome. Well, thank you so much for being here. It was so nice to meet you and loved hearing a little bit more about your story and just learning more from you today.
Awesome. Thank you so much. Thank you for having me.
Thank you so much for listening to this episode of the PlayBridge podcast. If you enjoyed the show, make sure to rate, review, and subscribe. And for more updates, make sure to follow us on social at Bridge Club. That's at BRYDGECLUB at Bridge Club on Instagram, TikTok, and YouTube.